welcome to Startup Voice. This is Efimchik, and we're going to be talking today about what do investors want. It's like that movie, right? What do women want? It's the ultimate question that every entrepreneur out there with his pitching deck is asking himself. So we know that investors are people, and we know that ultimately they invest emotionally, but that doesn't really get us anywhere, because how do we get their emotions aligned with a desire to invest in the project? So we'll go over a couple of points that investors look at, and they're the things that make investors excited if your project can show that it has them. First of all, and this is going to sound very cliche because everybody says it, but as many cliches, it's actually very true. So people, right? The first thing that an investor is going to be evaluating is the entrepreneur who's pitching him and the team that this entrepreneur is bringing with him. Some entrepreneurs will be alone at the early stage, and that can be a challenge because the investor is going to be looking at, does this project have what it needs to succeed? And if it's just one entrepreneur, maybe he'll be a great technical expert, but maybe he won't have the business background. Maybe he'll have a great business background, but he may not have the technical expertise. And this is why teams of 2 to 3 people are optimal at the early stages, because they can combine various areas of expertise. So, and in addition to the areas of expertise, investors are going to want to know that this team has the perseverance to stick it out through all the hardships that startup life can bring with it, that they have the right personalities, that they will complement one another, that they that the team won't break up in 6 months when the going gets rough. So the team needs to be really impressive. It needs to inspire the investor and really make him believe that they've got what it takes to get there, to make this, if everything else aligns, that this is the team that can get you there. So that's one component. It's essential, not enough though. So what else do we need? Well, the investor needs to be really excited about the opportunity. What does that mean? What's opportunity? There are a couple of things that are involved here. First of all, these are investors, and even angel investors are kind of in it for the money. So the economic opportunity has to be there. This is a very risky business, as we know. So unless there's 10 to 30x return, potentially on the other end of the tunnel, it's regardless of how great the business might be, it's probably not going to be that exciting for an investor. So there has to be the possibility of return, which means that the market has to be big enough, right, for this project, even if it takes a small share of the market, to be able to amount to something big. But in addition to the economic component, a lot of investors are investing for what's called social impact. It's the idea that you shouldn't just make money to make money, but you should make money while making the world a better place. Not every investor subscribes to this, otherwise we wouldn't have millions of apps out there in the App Store. But some investors do. And you have to know when you're pitching an investor whether that's something that's important to him. If it is, and your project fits that mandate, that's wonderful. It's going to be that much easier to make him excited about the project. So for instance, if your project seeks to bring literacy to populations with low literacy rates, or if it seeks to bring technology to communities with not enough technology that could benefit from it. So those kinds of things, you need to be aware of it. If you have that kind of a project, there are actually investors who specialize in that kind of investing. And then the third thing is, we have people, right? So you have the right team. There's tremendous opportunity. But there's a third component. if you can show that you have an unfair competitive advantage, something that is going to take your team and put them ahead of the game in this field, that's the final magic straw that can make the difference between an investor that writes the check and doesn't. So what kind of an unfair competitive advantage? Well, it could be that your people themselves are in it, right? If you have a project in an area that is very specialized, if your team consists of PhDs, people with very specific, very deep knowledge in an area that few people have that depth of expertise in, that could be it. That could be your unfair competitive advantage. For a lot of companies, that's not the case. And people alone, while they have to be great, they might not suffice. So it could also be intellectual property, preferably protected intellectual property with some patents on it. It could be that you've already entered the market and you're already ahead of the game. So you have great user traction already, and hopefully it's an area with a high barrier to entry, so other people can't catch up that quickly, even if they have the resources to do so. So, so those are the three components. Now, if you've been paying attention, all three are pretty subjective. So ultimately, as much as investors go into deep analysis of the project and have analysts working the numbers, in a startup context, it's all highly subjective, really emotional. But if you can convince the investor on all of those 3 points, make them excited about the people, about the opportunity, make them believe that you can get ahead of the game, then that's it. That investor is going to write a check, and many others, and getting capital for your project will be the least of your worries. I hope that's been helpful. Happy company making, and I will see you soon.